Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news China's inability to get out of its rut and the fast fading of the American exuberance are the dominating global economic scene centres. And this week, it'll be all about the US Fed and its Thursday monetary policy review. They face the prospects of higher inflation in the immediate plannable future from the cost of the new tariffs and an expansion that is faltering fast, and probably a wave of job losses. How they assess these conflicts will be keenly followed by financial markets, even if no rate changes actually expected at this time. New inflation pressures are also hitting Canada, and they'll release their CPI data this week, along with retail sales data. And many other countries will have monetary policy reviews this coming week, including Japan, China, Sweden, Switzerland, and the English. Japan will also release inflation data. And China's about to release retail sales and industrial production data later today, along with a look at their February house prices. Over the weekend in China, after the spectacular rise in January of their loan growth, they reported their February levels came in quite low, showing the policy-induced surge could not be maintained. There are only 1.01 trillion yuan in new loans extended for the month, far below the 5.03 trillion January level, and back to levels that bounced along for most of 2024. The February 2024 level was 1.45 trillion, so this 2025 result is a definite sag since then. And new official energy is going into boosting consumer demand by tackling consumers' property losses that haven't responded so far to prior efforts and to stabilise their stock markets. And their foreign direct investment data out for February was very weak again, only 114 billion yuan in February, 20% lower than the already low 143 billion in the same month of 2024. And this is off the back of a 2024 which was their lowest FDI inflows in 11 years. For perspective, February 2022, they attracted 220 billion in foreign investment, so this 2025 level is about half of that. Across the Pacific, a widely anticipated American March survey of consumer sentiment from the University of Michigan was out, and it fell much more than expected. In fact, it recorded its lowest level since November 2022 and is now down 27% from a year ago. One key reason Americans are so glum, apart from the chaos of policy gyrations, they fear a sharp return of inflation. Year-ahead inflation expectations in this survey jumped up from 4.3% in February, already a high level, to 4.9% this month. Also the highest reading since November 2022 and marking 3 consecutive months of unusually large increases. Their new long-term inflation expectations of 3.9% are now at a 32-year high. There is probably much more to come. The US price of timber is already rising, now at its highest level in 2 years. Industrial commodities like tin are also tracking much higher. We have previously noted the cost of eggs, which even after the recent pullback are still almost double what they were a year ago. There will be elevated interest in the Atlanta Fed's GDP Now tracking when it is updated tomorrow. And the US Treasury 10-year yield is now at 4.32%, up 1 basis point from Saturday at this time. And the price of gold will start today at just on $2,985 an ounce and up another net $2 from Saturday. Over the weekend, it briefly spiked to $3,000, but then retraced sharply before settling at the current level. Oil prices are little changed from Saturday at just on $67 a barrel in the US, while the international Brent price is now just on $70.50 a barrel. And the Kiwi dollar is now at 57.5 US cents and unchanged from Saturday. Against the Aussie, we're also unchanged at 90.9 Australian cents. Against the euro, we're holding as well at 52.8 euro cents. That all means our trade-weighted index starts today at just under 66.8 and also virtually unchanged. And the Bitcoin price starts today at $83,632 and down 0.7% from Saturday. Volatility over the past 24 hours has again been modest at plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.